Traditional investing is based on investing in growth assets up until the time you retire and then switching to income assets after you retire and not focusing on building wealth anymore. Should you stop building wealth when you retire though? I say absolutely not. And here are 3 reasons that I say this. And this is based on my own investing experience over the past 40 years, as well as stumbling into early retirement. Okay, so the very first reason that you don't want to stop building wealth the day that you retire or when you get older is that people live longer in retirement than they used to. And that's due to early retirement as well as longer lifespans until very recently. The lifespan has taken a little decline. But overall, we're living a lot longer than we were several decades ago. So this allows for wealth building in retirement simply because people have longer to build wealth in retirement than they did in the past. Back in the olden days, my grandparents' days, or really it was my Uncle Blake's days, since my grandfathers died when they were very young. But he retired at 65, and early 70s he died. He just didn't live that long. And of course, it makes sense under those circumstances and with that plan and that commonly happening to just focus on income and not having any risk in your portfolio. But with people living longer, investors, people have a long time to build wealth while they're in retirement. Many assets, in fact, can compound exponentially over 10 or 20 years or even fewer years when purchased at the right time and on the right side of the cycle. This means that someone who buys an asset at age 60 and holds it until age 75 can experience a significant increase in wealth while they're retired. If they're not at all focused on this, then they're going to miss this opportunity to build wealth during retirement. Now, traditional investing is based on making retirement withdrawals of 4% or so. I've talked a lot about this in detail in other videos and also in an article. I'll put a link to these in the description on the video. You can access that by just clicking more underneath the video. So you can read more about that or watch my other video. So based on that traditional retirement of making withdrawals of 4% or so, if a retiree is selling part of an asset to fund those withdrawals, such as from a stock holding, let's say they have a large stock position and they're gradually selling those stocks to pay for those 4% retirement withdrawals, the increase in wealth will of course be greatly reduced. So I want to address that traditional retirement is based on making those withdrawals and gradually reducing the value of those assets. But what I'm saying is, what if you can somehow buy an asset that will increase in value during the time that you're retired? It will allow you to continue to build wealth. The second point I want to make about this, to take a stand that you should not give up wealth building when you retire, is that retirees can build wealth with assets that generate income. There are some assets that can continue to increase in value while paying out income to the owners. There's no reason a retiree wouldn't want to own assets that present this kind of opportunity where they're paying income and they're also increasing in value versus that portfolio of stocks I referred to a minute ago, where stocks are just being sold and the value of that asset is just decreasing. That big stock position is just decreasing. Okay, so if you owned an asset that could hold its value and pay you income, that's ideal. My own experience with this has been from owning rental real estate properties. The rent provides the income, but the asset has continued to build wealth from appreciation throughout 2 uptrending real estate cycles. And this was after we stumbled into early retirement. And it wasn't too early, we were midlife. So this can be done when you're an older investor. This makes real estate rental properties, one of my very favorite investments for those who are willing to spend just a little time on it. I get a lot of comments, oh my gosh, that's awful. You know, who wants to go fix the toilet? I don't go fix toilets. I get people to fix toilets, and well, toilets rarely are a problem, really. So for our rental properties, it requires very little effort, and it's been a really, really good investment over the years. Now let's talk about stocks for a second as an asset that you can hold that builds wealth in retirement. Stocks are commonly held by retirees for their dividends. This can be another asset that builds wealth while generating income, just like I was referring to the rental properties, although there's not the leverage potential with the stocks like there is for the real estate. It takes an enormous amount of capital to get meaningful income from dividends as opposed to something like real estate rental properties. Owners of stock can, however, sell out of the money covered calls to generate significantly more income from the stock holdings than they're getting in dividends, while allowing at least some of that capital appreciation that would build wealth to occur in the underlying shares. So there's a lot to say about this. I won't get into too much detail. That's all I'll say in this video, but I do talk about this in another video, and I've also written a couple of articles about it. I'll put a link to those in the description under the video. Just click more and you can see that. Okay, it's worth repeating that in order to build wealth in retirement, assets must be purchased right, and it certainly helps to be on the right side of the cycle when the asset is sold as well. So if you can time the purchase of these assets when the cycle is sort of at the low end and headed up, and sell the assets when they have been through many years of appreciation, and or you may just want to hold on to those assets as we've chosen to do because, well, they continue to appreciate and they continue to pay income as well. It's super important to mention that it's super important to consider the overall cycle as well as purchasing right. It's often said that the money is made on the purchase of the assets, whether that's real estate or stocks. The money is made on the purchase, so by purchasing right. This applies to all assets, including stocks and real estate. One other asset that could currently be considered for generating income and possibly even appreciating in value are bonds. Bonds are now paying a decent income again due to the recent rise in interest rates. It's important for investors to remember, though, that bonds are subject to swings in value. So this can work for you or it can work against you. You can build wealth from owning bonds. The value, not just the income, the underlying value of the bonds. You can build wealth from that, or you can lose wealth from that. When interest rates rise, bond values decrease, and vice versa. So super important to remember. Okay, the third reason to continue to build wealth in retirement is because it's time to update the old model of retirees simply collecting Social Security and sort of dozing off while they're watching television. It's just dated. Who says that your net worth has to reach its peak the day you walk into retirement and that your wealth has to depreciate every month thereafter? We live in a time when there are hundreds of interesting ways to make money that suit almost any personality and any financial situation. We're seeing this with the younger generations that are generating all kinds of income streams. And anyway, which thought really holds more appeal to you? To get poorer after you retire or to build wealth after you retire? I'll let you decide and I'll make my case, but remember, retire certain.